Hello everyone. So today we will start with the next unit, that is dissolution of partnership. That is your last step in the partnership accounts. So now we will close off the partnership firm. We have opened, we have admitted some partners, we have made some retirements, we have made some deaths. I mean some partners died, everything happened. Now we will close off the partnership. So let's see what happens over here. So dissolution of partnership firm means the complete closure of the business of the firm, where the relationship between all the partners comes to an end. The firm's assets are sold and liabilities are paid off. Any balance remaining is distributed among the partners according to the partnership agreement or the partnership act. So over here what happens in the dissolution, in case of dissolution, the firm closed down. The firm, whatever we have, is closed down. Whatever the business we are running stops, and the relationship between all the partners comes to an end. So there will be no more a partnership existing between all these partners. Then whatever the firm's assets are there, it will be sold off. Whatever money we receive from the sale of assets, we'll use it towards what? Payment of liabilities. Whatever the bank loan, partners loan, or any outsider loan, whatever it might be. Then, if any balance remains at the end, it will be distributed among the partners as what? As their partnership agreement or as per the partnership act. See, if the partnership agreement does not talk anything about the distribution, then we will take it as per the partnership act. So there are some rules in the partnership act which we will discuss further. Then, after the dissolution of the firm, the firm's name and operations ceases to exist. That means there will no more be operations. The firm's name will have no validity from that period onwards. There is no continuation of the business under that partnership. So that partnership will come to an end, and there will be no more continuation of the name or the business of the partnership firm. Okay. Why will the partnership now comes? We have seen what happens. What happens when there is a dissolution. Now let's see why will a partnership come to an end, or why will it be dissolved. A partnership will be dissolved in the following cases: the expiry of the term of the partnership which it was formed. So let's say there was a general partnership or a time period partnership, particular partnership we have, right? So once that comes to an end, the time comes to an end, the partnership will be closed down. Let us say I have opened a partnership firm for 5 years. So once the 5 year is done, I will close down my partnership. This is case number one. Then case number two: completion of venture for which it was entered. Let us say I have thought to extract some minerals from the earth. So once all the minerals are extracted, I close down my partnership, because as per the partnership deed, I have mentioned that once the activity whatever I am undertaking comes to an end, I will close my partnership. So that's what I have done now. Then let's say there are two partners. Out of that, one partner dies. What about the partnership? Only one person remains, and we know that once there is only one person in the partnership firm, will there be a partnership firm? No, sir. That will be a sole proprietorship, right? So there won't be any partnership. So because of that, because of death of a partner, the partnership might come to an end. Then insolvency of a partner. Let us say there were two partners. Out of which one person has become insolvent. What do you mean by insolvent? The person who is not able to repay anything if anything comes up as a liability to him tomorrow, right? So, and we know that as per Indian Contract Act, any insolvent person cannot enter into a contract or cannot be into a contract. So that means whatever partnership agreement has been entered into becomes void from that day onwards, from when he becomes insolvent. Since there are two partners and one person has become insolvent, only one partner remains, and one partner cannot conduct a business as a partnership firm. So because of that, the partnership comes to an end or it is dissolved. But let us say there are three partners and only one person has been declared as insolvent by the courts. In that case, the two remaining partners can continue the partnership firm. It might not lead to a dissolution of the partnership firm, but it might lead to a dissolution of partnership. There's a difference between dissolution of partnership and dissolution of partnership firm. Okay, the differences are given in the textbook. Whenever I say dissolution of partnership, that means the relationship between the parties in the partnership comes to an end. Right? The remaining two people might make a new partnership. But when I say dissolution of partnership firm, that means whatever the firm was opened up comes to an end, a complete end. Clear? Okay. Then consequences or settlement process. How does the settlement process work? So after dissolution, the losses including deficiencies of the capital are to be paid, first out of profits, then out of capital, and if still something remains as unpaid, partners individually by their profit sharing ratio. So we know that partnership has unlimited liability. What do you mean by unlimited liability? That means if tomorrow the firm does not have enough capital to repay its liabilities, partners' personal properties will be used towards paying off the liability. That is what is called as unlimited liability. Remember partnership act. So please refer the partnership act. In the partnership act, we have separate unit for dissolution. So please refer that and then come to this chapter, please. Okay. So now, then application of firm's assets. So how will you apply firm's asset? So what is paid first? What is paid next? The assets of the firm, including any sum contributed by the partners to make up the deficiencies. So what do you mean by deficiency of capital? Deficiency of capital basically means the partner's capital, whatever is there in the partnership firm, is not enough to pay off the liability. It is not enough to pay off the liabilities. So in that case, what do partners do? They bring in more capital. They bring in more cash or bring in sell off their assets, their personal assets, and bring in more money to the partnership firm. Clear? Okay. So how will it be paid? The following order. To pay the firm's debt into the third parties, that is outside liabilities. So whatever outside liabilities we have will be paid first always. Then to loans and advances made by the partner to the firm, distinct from capital. So whatever loans and advances of the partners, if the partner has given any loan to the partnership firm, that loan will be paid towards second. Then to return the capital contributed by the partners, by each partner. So whatever contributions by the partners was done to the partnership firm in the initial days, that capital will be repaid now. And if anything remains extra after all these three payments, if anything remains extra, that will be paid as what? As partners' profit in profit sharing ratio. Clear? That will be the profits made by the partners in their profit sharing ratio. Done? Okay. Now, what are the entries that we need to pass in the dissolution? Let's have a look at it first. So journal entries in case of dissolution of partnership firm. So first of all, in case of transfer of assets to realization account. So here we open something called as realization account. See, in admission, retirement and death we had revaluation account. But in this case we have something called as realization account. What do you mean by realization? I will sell the assets and get the cash. This cash, whatever I get, is called as realized value of my assets. Realized value of my assets. Whatever liabilities I have, let us say I pay them in a discount of 5%. That means I am paying them only the 95% of the value. That means I am realizing the liabilities at a discount of 95%. Clear? So we open something called as realization account. The steps will be realization account. Then we have partners capital account, and balance sheet won't be prepared. We prepare something called as cash account. In this case, balance sheet is not required. Why? Because the partnership is being closed. It is being dissolved. Whenever it is dissolved, why do you need a balance sheet? Simple. Okay. So when the transfer of assets to the realization account. So whenever I transfer the accounts to the realization account, my value of my assets in the books of account reduces. So that means whenever the value of assets reduces in the books of accounts, that entry will be to assets. Why? Asset reduces, I will credit the entry. Debit what? Debit realization account is debited. At what values will the asset be taken? At book value. What do you mean by book value? Whatever the values are available in the balance sheet. So whatever balance sheet they give in the question, same values, same ditto values, do not change anything in that values and take it to the realization account. This is the first step. Then coming towards my liability. Whenever liabilities reduces, why is it reducing? Because I am transferring it to realization account. So whenever liabilities reduces, we will debit the account. So the entry will be liabilities account debited to what? To again realization account. To realization account. See, realization account do not have any nature. Okay. In this chapter, whatever realization account we have, it doesn't have any nature. So depending on one head, we have to pass the other head. Done? Okay. Next, in case of sale of assets on dissolution. So first step is I transfer my assets and liabilities to the realization account. So once it is transferred over there, I sell off the assets. I might receive the whole value, I might receive the more value, I might receive less value. Three cases can happen. Because see, whatever asset I have, let's say I have this calculator worth rupees 10,000 rupees as an asset. But tomorrow when I sell this, I might not receive 10,000 rupees. I might receive 9,000 rupees, or I can also receive 11,000 rupees. It depends on case to case basis depending on the demand. So now what to do? Now what will I do is, whatever assets I have, these are sold. So whenever I sell the asset, I receive what? I receive cash. So cash account debited to what? To realization account. Then in case of payments made to the liabilities, payment made towards the liabilities, in that case what to do? In that case, see, I am making a payment, so the cash goes out. So to cash account debit what? Realization account. See, I cannot open the liabilities account once again. I cannot debit the liabilities account. You might say that, sir, liabilities are being debited. Why? Because liability will reduce, right? Whenever I pay off the liability will reduce, right? No, it won't. Because see, I have transferred all of them to what? To realization account already. So because of that, if I pay a liability or I receive the amount towards asset, it will be through realization account only. Remember this, clear? Then what if the assets are taken over by the partner? What if the assets are taken over by the partner? So what to do in this case? See, whenever partner takes away any asset, he will not pay any money. He will not pay any money. But it does that, adjust that with my partner's capital account. Adjust that with my capital account. So that means my capital value will increase or decrease. It will decrease. It will decrease. Why? Because partner is paying it out of his capital. Right? Partner is paying it out of his capital. He is not bringing in any cash for the asset. So because of that, the entry will be partners capital account debited. Why partners capital account debited? Because whenever partners capital balance reduces, we will debit the account, right? So partners capital account debited to what? To again realization account. Then because why? Because everything has been already transferred to realization account. So I cannot open asset or liability side once again. Then okay. Then in case of payment of dissolution expenses, so what happens? Whenever I pay the expense towards dissolution, see, in dissolution so many things happens. I may appoint some people to complete the procedure of dissolution. In that case, what happens? That person has to being paid some money, right? So I have to pay him money. So to cash or bank account, debit what? Debit again realization account is debited. Why? Because the dissolution expenses are paid towards what? Towards dissolution, and all the entries towards dissolution goes where? To the realization account. Done? Yes. Next. Now again, remember your admission, retirement and death. So whatever transfer of general reserves and profits to the partners in profit sharing ratio, where will this be done? To the partner's capital account. So whenever I give them a share of general reserves or profits to the partner, their capital balance will increase or decrease. It will increase, sir. So whenever it increases, to partners capital account, debit what? General reserves or profits account debit. Clear? Okay, next. Payment of final amounts to the partners. So after making all the adjustments, I pay off the liabilities, I receive the money from assets, I pay off the liabilities, I pay the dissolution expense, I pay the whatever liabilities whether I pay them all of them off. Now after coming to that, what remains is being distributed to the partners. First towards capital, then towards their what? Their profits or the extra assets remaining. So how will I pay this off? To bank account, because I'm making the payment, right? So to bank or cash account. Debit what? Debit partners capital account. Why partners capital account? See, whenever I'm paying the partners off, that means I'm paying them the capital share first. Whenever I pay them the capital balance in the books of accounts will increase or decrease. It will decrease, and whenever partners capital value decreases, I will debit the account. So partners capital account debited. Capital account debited to bank account is the entry. Then okay. Now what we will do is, we will start the questions now. Let us look at some questions on realization account. So first question from your test your knowledge or your practical questions. Look at the question. PQR are partners sharing and profit and losses in the ratio of 2:1. Their balance sheet as on 31st March is as follows. So they have given you all the values over here, right? Then reserves fund is there. So this reserve fund, what to do with this? This has to be transferred to what? To the partner's capital account. Then all the assets are given over here. Then they decided to dissolve the business. The following amounts are realized. So plant and machinery, fixtures, stock, standard. So all the value, how much ever is realized, is given to you. Creditors allowed a discount of 5%. Fine. So I have paid creditors with a discount of what? 5%. Realization expenses amounted to rupees 1,500. Then there are unrecorded asset of rupees 6,000, which was taken over by Q for rupees 4,800. So there was an unrecorded what? Asset which was taken over by Q at rupees 4,800. Fine. An amount of rupees 4,200 due for GST had come to notice during the course of realization, and this was also paid. So there was an amount due towards GST which was unpaid. So this has also been paid during the realization. So you are required to prepare realization account, partners capital account and cash account. Let's start. Now let's prepare something called as realization account. This is my debits, this is my credit. So particulars amount. Okay. Starting with take all the assets on the debit side. Take all the assets on the debit side. How? 2 plant and machinery, 2 fixtures, 2 stock, 2 sundry debtors, except cash, take everything. So take down the values, rupees 1,08,000. I'm just copy pasting over here, nothing new. 24,000, 60,000. Then sundry debtors is 48,000. Okay. See, why did I pass the entry on the debit side? Remember the journal entry. Realization account debited to asset account. Remember the same entry. Now come to this. Do the same for the liabilities. We have what? Only creditors as a liability. So creditors 48,000. So by creditors rupees 48,000. Okay. Now after this what has happened? There has been some realizations, right, of these many values. So where will I take this? On the opposite side where the assets have been taken. So the entry will be by cash account. So we have plant and machinery, we have fixtures, stock and debtors. So write down the amounts: 1,02,000, 18,000, then 84,000, and at the end 44,400. See, what you can do in examination is you can just club this and write down the total amounts over here only. Okay, that also you can do, but for understanding and since this is the first question, I am solving it fully. Done? Okay. Now the total amounts. How much will this be? 1,02,000, 1,02,000 plus 18,000 plus 84,000 plus 44,400. It is 2,48,400. After this, then what has happened? Creditors are allowed a discount of 5%. So that means whatever 48,000 we had, we have paid how much? 48,000 minus 5%. That is 45,600 has been paid. So creditors are on this side, so payment will be on the debit side. So the entry will be to cash towards creditors. How much? 45,600 rupees. 45,600. Done. Next, realization expenses amounted to rupees 1,500. So the entry is what? Realization account debited to cash account. So to cash account, how much? 1,500. This is for what? Expenses. Then there has been a unrecorded asset of rupees 6,000 which was taken over by Q for rupees 4,800. So since it is unrecorded, I won't be taking it over here. Why? Because it is not at all recorded in the balance sheet. Clear? If it was recorded, I would have taken it over here and then pass the entry on this side. But now it is not recorded, so I won't be taking it over here and simply pass the entry on the credit side. As what? What was journal entry? Realization account? No. Partners capital account debited to realization account. So the entry will be by whose? By Q's, I think, right? It was taken over by Q. So by Q's capital account. Since it is unrecorded, I am not taking the value of rupees 6,000. Clear? If it was recorded, I would have taken the 6,000 rupees value. But since it is unrecorded, it is not taken to the books of accounts. Because of that reason, I will not take the value of rupees 6,000 anywhere. Remember this. So this is what? Realization expense. Sorry, not realization expense. Sorry. This is unrecorded asset. Rupees how much? 4,800. After that, an amount of rupees 4,200 due for GST had not come to the notice during the course of realization, and this was also paid. So whenever I pay a GST, again on this side, to cash account is what? Towards GST. How much? Rupees 4,200. So we are done with all the entries in the realization account. Now find out the profit or loss on realization. Now tell me, whatever profit or loss on realization is there, where will this go? Revaluation account, similarly to the partner's capital account in the profit sharing ratio. So pass the entry. So 1,08,000 plus 24,000 plus 60,000 plus 48,000 plus 45,600 plus 1,500 plus 4,200 minus 48,000 minus 24,48, sorry, 2,48,400 minus 4,800. That will be rupees 9,900 on the debit side. So, to partners capital account, this is what? Realization profit. Realization profit. How much? Rupees 9,900. Remember, if anything comes on the debit side, it is a profit. Anything comes on the credit side, it is a loss. Why, sir? Why? Because see, I have assets over here minus all the assets realized. That means if I am receiving more over here, I will get the balance over here because this will be less, obviously. So I will have a profit over here. Remember, it's always. Divide this among the partners. What is the partner's name? P, Q and R. So P, Q, R. How much? 9,900 in the ratio of 2:2:1. So divide by 5. 2 plus 2 plus 1 is 5. So 9,900 divided by 5 equals to into 2 equals to, that is 3960. 2 3960. 1 equals to 1980. 1980. Okay. So we're done. So next account we open is what? Partners capital account. So now partners capital account we started with what? Always with the capital balances. Always with the capital balances. Remember admission. So by what? By balance brought down. How much? 1,20,000, 48, 24. 1,20,000, 48,000 and 24,000. After this, profit on realization will be taken to what? To the credit side, because it will increase the value of profits, right? Sorry, value of capital. So by realization account, 3960, 1980. After that, I have told you, remember, there's a reserve fund of 60,000 rupees. How will I divide this? In the ratio of profit sharing. So 2:2:1. So 60,000 divided by 5 again into 2 equals to, by general reserve, 24,000 and 12,000. 2:1 ratio. After this, for Mr. Q, there is a unrecorded liability, right? Sorry, unrecorded asset which was taken over. So it was passed through what? Through Q's capital account. So because of that, this will be transferred to the debit side of the Q's account because it will reduce his capital value. To realization account in Q's 4,800. Anything else to be passed? Nothing. Now balance of the asset, the account. How much will the balance be? To balance carried on. First of all, P, 1,20,000 plus 3960 plus 24,000 equals to 1,47,960. Then 48,000 plus 3960 plus 24,000 minus 4,800 equals to 71,160. Then 24,000 plus 1980 plus 12,000 equals to 37,980. So look over here. I take balance carried on over here whenever the firm is continuing. But since in this case the firm is being closed down completely. Will I keep this balance carry forwarding? No, I will pay off this balance. Through what? Through cash account. So partners capital account debited to cash account is the journal entry. Because to cash account, why? I am paying the cash. Done? Yeah. Now let's prepare what? Let's prepare cash account. First of all, opening balance of cash is what? Over here, cash opening balance rupees 60,000. So to balance brought down, debit, credit. increase, decrease, to balance brought down. Rupees how much? 60,000. 60,000 is the opening balance. Then pass all the cash entries, payment or receipt going on. So first of all, we have paid what? 45,600 towards what? Towards liabilities, right? So first of all, first of all, we have received 2,48,400 towards what? Realization of fixed assets. So 2,48,400. I have received cash, so entry will be debited as what? To realization account. To realization account. 2,48,400, I guess. Then I have paid creditors 45,600 rupees. 45,600 rupees payment. So account credited by realization. 45,600. Then again by realization. What? Realization, dissolution expenses were paid, right? Expenses 1,500. 1,500. Then what else I have paid? I have paid GST 4,200. Again by realization 4,800. Then what else? Have I received any money towards this unrecorded asset? Have I received any money towards this unrecorded asset? No, I have not received any money over here. So because of that, cash account there won't be any effect. Then after this, payment to partners made through cash. Pass the entries. Payment made, right? So on the credit side, by P, by Q, by R. How much? 1,47,960 as per partners capital account. 71,160. Then 37,980. 37,980. I did nothing over here. See over here. Whatever the amounts were taken over here, same account has been passed to the cash account. That's it. Nothing new. Now try to balance the cash account. 60,000 plus 248,400 minus 45,600 minus 1,500 minus 4,800 minus 147,960 minus 71,160 minus 37,980. 600 rupees is the difference. How is that? Whatever cash account we have should be completely balanced. Whatever cash account we have should be completely balanced. Let me just check. So I made a small mistake over here. 4,200 was the GST realized. Remember? See over here. GST is how much? 4,200. But mistakenly I took it as rupees 4,800. I will make this 4,200. Now the 600 rupees balance has been cleared and my cash account is tallying completely. So what does that mean? That means in dissolution, your cash account should always tally. Just like your balance sheet, in case of admission, retirement and death, your cash account in case of dissolution should always tally. That means we have sufficient money to pay off the liabilities and completely close down the firm. Clear? Okay. See, why is cash account being balanced over here? Because we do not take cash account in the realization account. If you have noticed over here, I have not taken cash account in the realization account, right? Because of that, because why? Because I will balance this separately as a separate different ledger. Clear? Okay. Then going ahead. Now we will understand what happens when one partner becomes insolvent. One or two partners become insolvent and the firm is being dissolved now. What happens in that case? Let's see. So we apply something called as Garner versus Murray rule. If the partnership deed is silent and the firm is dissolved due to insolvency of a partner. Now the partnership firm, let's say, had 3 partners. Okay. Out of this, one partner has become what? Insolvent. That means he is not able to pay anything off. Because of this, the whole partnership has what? Dissolved. Now in this case, what to do? How to pass the accounting entries? And the partnership deed is also silent on how to deal with this. In that case, we apply this rule. This rule was given by, I think, UK courts, where a partnership was dissolved due to insolvency, and they have mentioned on what is the procedure that you need to follow during this kind of dissolution. So the loss due to the insolvent partner's capital deficiency is borne by the solvent partners in the ratio of their last agreed capitals and not in the profit sharing ratio. So what do I mean by this? Let us say all the partners have debit balance. Or let's say that there are 3 partners, A, B, C. Okay, C has become insolvent. Now. Okay, so after preparing the partner's capital account, you come to know that C has a debit balance in capital. C has got a debit balance in capital of rupees 20,000, for example. Okay, and these both people have 15,200, 16,200 trade balance. That means these both people have some balances remaining, but whereas Mr. C has a deficit in this capital of rupees what, 20,000. Now let us say the profit sharing ratio between A, B, C was 2 is to 2 is to 1, 2 is to 2 is to 1, and the capital of A was 20,000, B was 30,000, and C was 15,000, for example. Okay. Now, whatever deficit of Mr. C is there of rupees 20,000, this has to be shared. Since Mr. C has become insolvent, can he bring more money? No. Since he is insolvent, he cannot bring in more money. So what will happen? Mr. A and Mr. B has to bring in the money. Instead of Mr. C, Mr. A and Mr. B have to bring in the money. Because of all the past deeds of the partnership they have come into, now Mr. B and Mr. A have to face all the negative issues because of Mr. C. Mr. C is insolvent. He is not able to bring any money now. So Mr. A and Mr. B will bring in. Now comes the question, in what ratio? In what ratio? It should not be in the profit sharing ratio. It should be in the ratio of their capital, that is 2 is to 3 ratio. 2 is to 3 ratio. The initial capital, whatever they have in the balance sheet, on that ratio basis, we need to divide this particular thing into what ratio? In 2 is to 3. 2 is to 3. How much will that be? 20,000 divided by 5 into 2 equals to 8,000. 8,000 by Mr. A and 12,000 by Mr. B. Clear? If it was in profit sharing ratio, it would have been 2 is to 2. That is 1 is to 1 ratio. 2 is to 2 is equal, right? So 1 is to 1 ratio. But in this case, since it is an insolvency, it will be divided in what? Not in profit sharing ratio, but in capital ratio. So what does the rule say? Conditions for applicability. So before that, the loss due to insolvent partners, that is Mr. C's capital deficiency, it has to be borne by the solvent partner. Who are solvent over here? Mr. A and Mr. B are solvent. In what ratio? In the agreed capital ratio. And not in the profit sharing ratio. Please remember this. Done? Okay. Now when will this rule apply? The firm should be dissolved. At least one partner is insolvent and cannot pay his deficiency. What do I mean by deficiency? Whatever his capital is there, it is negative. Whatever capital he has has become negative. That means he had to pay the firm. Firmige pay ಮಾಡಬೇಕಿತ್ತು. But because his capital is negative and he is insolvent, he is not supposed to pay anything. He is not able to pay anything. He do not have his personal asset. So because of that, the remaining partners will bear the deficiency. The partnership deed is silent on how to bear this loss. If the partnership deed does not talk anything about it, then we will apply what? We will apply Garner's rule. Now what does the rule say? The steps. Close the realization account. Distribute the profit in the profit sharing ratio. So whatever profits you have in the realization account, that will be in the profit sharing ratio. Only the deficiency in the capital account, in the partner's capital account, will be shared in the what? In the capital ratio. Wait, once we solve the question, you will clearly understand this. Okay. Adjust the capital accounts of all the partners. Whatever entries we made just now, the same entries has to be passed in the partner's capital account. Then identify the insolvent partner's deficiency. Whatever insolvent partner is there, find out his deficiency by closing his account first. Close his account first. Then share that deficiency among the solvent partners. That means the remaining partners in the last agreed capital ratio. Now let us solve a question and we will understand this. Okay. Look at illustration number 4. So A, B, C, D are sharing the profit and losses in the ratio of 4 is to 3 is to 2. Sorry, 4 is to 2 is to 1. 4, 3, 2, 1. Fine. I just mark this. This is the profit sharing ratio. Then decided to dissolve their partnership on 31st of March 2022 when their balance sheet was as under. So the balance sheet as on 31st March is given to you. In this we have employee provident fund. This has to be paid off. Remember, this has to be paid off. Then anything else? Okay. So here in the capital accounts, 2 partners have credit balance, remaining 2 partners have debit balance. These 2 people already have deficiency. Arey Baba, these 2 people already have deficiency now. Let us see who has become insolvent. The following information was given to you. One of the creditors took some patents whose book value was rupees 5,000 at a valuation of 3,200. The balance of creditors were paid at a discount of 400 rupees. So out of these creditors of rupees 15,700, they have taken what? They have taken patent worth rupees 5,000 rupees at a book value of, at a valuation of rupees 3,200. So that means out of 15,700, I have paid what? 3,200 to the creditors. The balance of creditors were paid at the discount of rupees 400. Okay, let's see how to do it. Fine. No issues. We'll see. We will look at it. Then there was a joint time policy of 20,000 rupees not mentioned in the balance sheet, and this was surrendered at rupees 4,500. That means I am receiving money on the surrender of joint life policy, which was not recorded in the books of accounts. The remaining assets were realized as follows: the debtors, stock, then plant and machinery, patents at 60% of the book values. So see, if you see over here, patents, how much do we have? Patents 8,000. Out of 8,000, 5,000 was taken out by whom? Creditor. That means how much remains in our hand? 3,000. So those 3,000 worth of patents have been realized at what? 60% of the book values, at the 60% of book values. Remember this. Okay, keep this in mind. Expenses of realization is how much? Rupees 1,500. D became insolvent. Can I apply Gardner vs. Murray rule? Yes, sir. Why? Because partnership firm is being dissolved. One of the partners has become insolvent, and partnership deed does not talk anything about the procedure I need to take care of. Done. A dividend of 25 paisa in a rupee was received in respect of firm's claim of his estate. So what has happened over here? Out of everything that was due, only 0.25 rupee was received, or 25 paisa was received against that partner. Now let's see how to do the accounts. So first of all, we will prepare what? We will prepare realization account, then we will prepare partners capital account, and at the end we will prepare what? Cash account, cash or bank account. In this case, what do we have? We have bank account. So we will prepare bank account. Done. Let's start. Now let's start with the realization account. So first of all, what should I do? Transfer all the assets, all the liabilities to what? To the realization account. So all the assets. Should I take bank? No. Only from debtors till what? Till patents will be transferred to what? Realization account. So what I will do over here is, I won't be passing all the entries again. So in the examinations you can do it, but I will just transfer all of them together. So sundry assets. How much? Add 15,850 plus 25,200 plus 800 plus 20,000 plus 8,000 equals to 69,850. Then liability. See, we have two liabilities over here. That is creditors and employee provident fund. Both has to be taken to the realization account. Even though see, employee provident fund cannot be divided between the partners. Why? Because this belongs to whom? This belongs to employees. Because of that, it will be a liability, and it has to be taken to the what? Realization account. So by sundry liability, if I add both creditors and employee provident fund, how much will that be? 15,700 plus 6,300. That will be 22,000 rupees. So 22,000 rupees. Done. Now next, what to do? Next, realizations. How much is realized at what? Rate? So first of all, so over here, let's start with this part. So debtors at 10,800. So what I will do is, by cash account. Why over here? Again, remember, assets here, realizations here, liabilities here, payoff here. So to cash account or bank account. In this case, we have bank, right? So let's prepare bank account only. To bank account. So first of all, debtors. Then what else? Stock, plant and machinery. Then patents. Okay. So from debtors, how much did I realize? 10,800. Stock, I have received 15,600. See, please keep your study material with you. Because I'm just doing a copy paste over here. Then plant and machinery, 12,000 rupees plant and machinery. So 12,000 rupees plant and machinery. Now comes the patent. Okay. For patents, what has happened? See, for patents, I will make a small working note over here. Okay. See, whatever patents we had, how much of the value of patents as per the balance sheet? It is rupees 8,000. So out of 8,000, what has happened? Two things have happened. Creditors took over some patents whose book value was 5,000 rupees. So out of this, 5,000 worth of patents have been taken over by whom? By creditors. And remaining is how much? Remaining 3,000 has been realized at what? Has been sold off at 60% book value. So how much will that be? At 60% book value, how much will that be? 30,000 into 60%, that is 18,000 rupees has been received. 18,000 rupees has been received from the realization. So 18,000 rupees. See, for this 5,000, did I receive any cash? Did I receive any cash? No, I did not receive any cash. Why? Because it was taken over by the creditors, right? So I did not receive any cash. So I will adjust this with what? With creditors balance. Okay. So then what else I have received in cash? Here, joint life policy of rupees 20,000 rupees. Joint life policy of 20,000 rupees. Not mentioned in the balance sheet, and this was surrender what? For 4,500. So again I have received cash towards joint life policy. Joint life policy 4,500. Again, just like your previous question, here also it has not been taken to the balance sheet. So I have not taken it over here in the sundry assets. Clear? And I have directly taken it as a realization to the cash account. Now total this. 10,800 plus 15,600 plus 12,000 plus 18,000 plus 4,500. That is 60,900. 1,900. Done. BRC. Small error I have made. It is 1,800. See, 3,000 into 60% is 1,800. So here also just change the amounts. This is 1,800. Make a total once again. 10,800 plus 15,600 plus 12,000 plus 7,800 plus 4,500. That is 44,700. Now let's pay off the creditors. So to bank account towards what? Creditors. Okay. Now let's see. How much was the creditors balance? 15,700. So let's see how have we paid them. So creditors balance is how much? 15,700. So towards this 15,700, one amount was paid towards what? Towards the patent, right? For rupees 3,200. 3,200. Okay, how much remains? 15,700 minus 3,200 will be 12,500. So for this 12,500, what have they told us? That the balance of creditors were paid at a discount of 400 rupees. So that means the balance of creditors have been paid at a discount of 400 rupees. So how much we have paid? We have paid 12,500 minus 400 rupees. So 12,100 rupees we have paid to the creditors. Done. So take this to the realization account. We have paid them, right? So as per the working note, what? 15,700 minus 3,200 towards patents, and then minus 400 rupees discount. How much will that be? 12,100. 12,100. Then again, what else is there? So this has been taken care of. This is done. Over here, expenses for realization is how much? 1,500. So to bank, it is expenses. How much? 1,500. So now see, whatever employee provident fund we have over here, this has to be paid off. This is the government mandate. Because see, this fund was created because the EPF Act says that we need to create a fund for the same. Since the EPF Act says that we need to pay it off to the whom? To the employees. I cannot keep it with my own. So I have to pay it off. So to pay this off, again, through what? Through bank account. EPF. How much? With the full value. I cannot reduce any value over here. That is 6,300. But if the question says that the employee fund has been paid at rupees 6,000, in that case I can take 6,000 rupees over here. No issues. Done. Okay. Let's balance it off and check the profit or loss. So 69,850 plus 12,100 plus 1,500 plus 6,300 minus 22,000 minus 44,700. That is 23,050. I have a loss of 23,050 rupees. By what? By partners capital account. Loss. Between whom? A, B, C, D at a ratio of 4 is to 3 is to 1. So 4 plus 3 7, 7 plus 2 9, 9 plus 1 10. So divide 10 straight away. 23050 divided by 10 equals to, so much, 2305 into 2 equals 4610, 3 equals 6915, 4 equals 9220. So 4 is 2, 3 is 2, 2 is 2, 1. Next, what will we prepare? We will prepare partners capital account. So let's start. So now partners capital account, how will we start? Opening balances. So let's look at the opening balances. See, over here what has happened? Two partners have credit balance, whereas two partners have debit balance. So take it accordingly. So A and B, 40,000 and 20,000. By balance brought down 40,000, 20,000. C and D credit balance. So two balance brought down how much? 3200, 8415. 8415. Done. Next step. Loss on realization to be taken to the capital account. So on the credit side, sorry, debit side, to realization, that is loss. How much? 9220, 6915, 4610 and 2305. After this. So most of the entries are done, but now let us see how to apply Garner versus Murray rule. So we have taken care of everything. Whatever general reserves are there in the balance sheet, no general reserves. See, no general reserves or profits in the balance sheet, so skip it. So now what we will do? We will learn how to apply Garner versus Murray rule. So first step is always remember, whenever one partner is insolvent and there are other partners who are solvent, if if there is a realization loss, as in this case, and if there is a realization loss, this realization loss should be brought in cash or bank. This realization loss should be made good by the partners in cash or bank account. How will I do this? So by bank account, take all these amounts of the solvent partners only. Do not touch of insolvent partner. Why? Because insolvent partner cannot pay anything. So because of that, take only of the solvent partners. Whatever amounts were made as loss on realization has to be brought in through cash or bank. So whenever they are brought into cash or bank, capital value increases and I will credit the entry. Right? So the amounts will be how much? 9220. Same amounts. Whatever amounts are given over here, same amounts will be taken on this side. Simple. 9220, 6915, 4610. For D, it is nil. Why? Because as per the question, remember, D has become insolvent. So do not touch for D. D cannot bring any money more. Done? Okay. Now let's see what to do. After this, first of all, close D's account. I will just mention realization loss over here. Okay. Realization loss taken over. Now close D's account. Check. See, on the credit side there is nothing. On the credit side there is nothing to be taken care of, right? Only on the debit side, which is a deficiency. Why? Because capital will always have a credit balance, but in this case it is a debit balance. That means it was already in deficiency, and upon that I have taken what? Realization loss. So 8415 plus 2305 equals to, so total deficiency is how much? 10,720. 10,720, right? Total deficiency of D, 10,720. Now out of this 10,720, in this question, specifically in this question, what has happened? They have given us that, see over here, let me erase all these things. Okay. So D has become insolvent. Okay, fine, no issues. A dividend of 0.2 paisa in a rupee was received in respect of firm's claim against his estate. So what has happened over here? His estate has paid how much? 0.25 paisa in a rupee. That means 0.25 paisa or 0.25 rupee he has paid. So because of that, I can recover how much? Around 25% of the deficiency. I can recover around 25% of the deficiency. So I will make two parts. So 25% is recovered by him, by his estate. Remaining 75% will be what? Will be borne by solvent partners. Solvent partners. In what ratio? In what ratio? In capital ratio. In capital ratio. Not profit sharing ratio. In capital ratio. Remember this. Clear? Whatever realization loss was there was taken through what? Through profit sharing ratio. But whatever deficiency loss you have, will be taken care by capital ratio. So now, how much is the amounts over here? 10,720 into 25%. That will be 2680 or 0.25 paisa also you can do. The answer will be the same. And over here 0.75 is not recovered. So how much will that be? 10,720 into 0.75. That will be rupees 8040. Now this will be shared between whom? This will be shared between the solvent partners. But look over here. In my partner capital account, who are solvent? Who can bear the loss? Only A and B. Why? Because Mr. C, if you see, Mr. C is solvent. I agree, Mr. C is yet to be solvent, but he does not have any debit balance. Any credit balance. His capital account already has a deficiency. His capital account already has a deficiency. And how much will you ask him to pay more? So because of that, only A and B will bear the loss. In what ratio? In capital ratio. Where will I get the capital ratio? Look at the balance sheet. What is the capital? 40,000. So the ratio will be 2:1 or 4:2. 4:2 is equals to 2:1. So the ratio will be 2:1 between A and B. So this will be shared between A and B. In what ratio? 2:1 ratio. Divide. So 8040 divided by 3, because 2 plus 1 is 3, equals to, this is how much? Rupees 2680. Then into 2 equals to, this is how much? 5360. And if I add these both, I will get what? This amount. Done? Okay. Now let's pass the entries in the ledger. So first of all, he was able to bring this amount through what? Through cash. So whenever he is supposed to bring any amount by bank account, how much? How much was he supposed to bring? 2680. 2680. So in this, on the credit side, 2680 was brought in by D. Remaining amount was borne by whom? By A's capital account, by B's capital account. How much? How much did they bear? 5360, 2680. 5360, 2680. Done. Now let's try to balance this account. The balance should be 0. Once you share the deficiency between A and B, the deficiency should be 0. So let's check once. 8415 plus 2305 minus 2680 minus 5360 minus 2680. The answer is 0. That means we have correctly shared all the deficiency. Now come to A's account. Now what will you do with Mr. A? Mr. A has shared some deficiency. That means his capital will reduce. So in Mr. A's account, pass how much? Entry 2680. That is the deficiency. 5360. 5360. That is the deficiency shared. 5360. Then Mr. B has shared 2680. The entry will be what? Same like your goodwill adjustment. Since I am taking the amounts in A and B column, the entry will be to D column. To D's capital account. Mr. C is not sharing any deficiency. So it is nil. Done? Okay. Now let's close the accounts of Mr. A and B. So first let's start with Mr. A. 40,000 plus 9220 minus 9220 minus 5360. How much remains? 34640 remains. Then for Mr. B, 20,000 plus 6915 minus 6915 minus 2680. How much will this be? 17320. Now Mr. C, 4610 minus 320 minus 4610, negative 3200. That means on this side I am getting 3200. What will happen with this amount? That means whatever deficiency Mr. C has, he has to bring in cash. He has to bring in cash. Why? Because Mr. C is solvent. Mr. C is solvent. Only Mr. D was insolvent. Mr. A, Mr. B, Mr. C, all the three people are solvent. So that means Mr. C can bring in cash. So whatever deficiency is there in his capital, it will be brought in by Mr. C in cash or bank. So the entry will be what? By bank account. And over here, to bank account. Why bank account? Because sir, remember, these amounts will be paid off. These amounts will be paid off to whom? Mr. A and B. Why? Because their capital is more than sufficient to pay off the deficiencies, right? So after bearing Mr. D's deficiency, still there is a balance remaining in A's and B's capital account. So this will be paid off in cash account. Clear? Okay. Now let us see how to pass the journal entries in the cash account. Let's prepare cash account. Cash or bank account in this case, right? So bank account, debit, credit. First of all, opening balance of cash, sorry, or bank. How much is it? 535 rupees. Yes, opening balance. See, please do not pass bank account in the realization account. You should not ever pass bank and cash account in the realization account, because we will separately prepare the bank or cash account. Clear? So bank account, 535 rupees. 2 what? 2 balance brought down. Now look at all the entries in the realization account. First of all, 44,700 realized towards assets. So 2 realization account. Just a minute. To realization, how much? 44,700. Then anything else we have received? Nothing. Okay, so 2 payments. So bank. So I just add it, okay, for shortcut purpose. Please do not add it in the examination. Please do not add in the examination. I am adding over here for shortcut purpose. 100 plus 1,500 plus 6,300. So 100 plus 1,500 plus 6,300, that is 9,900. By realization, 9,900 rupees has been paid. Then anything received in cash or bank over here. Realization loss, whatever realization loss was there, they have bought in through bank account, right? So add all these 3 amounts. 9,220 plus 6,915 plus 4,610, that is 2,745. By partners capital account. In examination, pass by A's account debited, by B's account debited, by C's account debited, right? Okay, not over here. They have bought in cash, right? So debit the account, because cash increases or bank account increases, debit the account. So to partners capital account, 2,745. Then again, Mr. C has brought in some money. Remember, Mr. C has brought in some money, 3,200. Pass it again. So C's capital account debited, 3,200. I think Mr. D has also brought in some money. Remember, from his estate, 0.25 was recovered. Remember, so 2,680. To D's capital, 2,680. Then payment to the partners, payment to A and B, that we have paid through bank account. So the entry will be on the credit side, because I am making the payment by A's capital, by B's capital. How much? 34,640, 17,320. Anything else remaining? Okay, so let's try to balance it off. If it is not balancing, let's see what to do. Let's try to balance. So 535 plus 44,700 plus 2745 plus 3,200 plus 2680 minus 19,900 plus minus 34,640 minus 17,320. The answer is 0. That means my cash or bank account has completely tallied. That means whatever entries I have passed is perfectly fine. Got it? Yes. So we are done with this question. Next. Now let us look at the next question, that is illustration number 3. Amal and Bimal are in equal partnership. Their balance sheet stood as follows on this when the firm was dissolved. So they have given us a creditor's account and capital balance of Amal and Bimal's drawing. So what does Bimal's drawing mean? That means his account balance is in debit balance. Then all the assets are given to us, including the cash account. Then the assets are realized as follows: plant and machinery, furniture, debtors, and stock is given. Okay. The expenses of realization amounted to rupees 175. Amal's private estate is not sufficient even to pay his private debts, whereas Bimal's private estate has a surplus of rupees 200 only. Show the necessary journal entries, ledger accounts in the close of firm. Okay. Now what has happened over here? Over here, Amal's private estate is not even sufficient enough to pay the private debts. So that means he cannot bring in any money, zero. Even if there is a deficiency, Amal cannot bring in any money, whereas Bimal can bring in only 200 rupees. So that means at the end of the day, there might be a chance that we might not be able to pay any liabilities. Let us see what to do over here. Clear? Let us see. So first of all, what will we prepare? We will prepare realization account. Okay, this question is a bit trickier than the previous question, so let's go through it deeply. So this is my what? Realization account. Realization account. Debit, credit. Now all the assets, all this except cash till here, take it to the debit side. So to sundry assets. To sundry assets, how much? 2,500 plus 500 plus 1,000 plus 800 equals to 4,800. 4,800. Then on the other side, liabilities. By creditors only is the liability, so I will just mention creditors. How much? 4,800. Then after this, realizations. These are all the realizations. Yes. So add all of them. 1,250 plus 150 plus 400 plus 500. 2,300 has been realized by cash. Realized. How much? 2,300. Then expenses of realization is 175. So to cash, this is my expenses. How much? 175. So here only I can see that I need how much? 4,800 to be paid off. I need 4,800 to be paid off. But how much do I have in balance? Only 2,300 plus over here cash of how much? Rupees 200. That means there will be more deficiency because this person also cannot bring in anything. So we here open a new account called as deficiency account. How will we do that? I will tell you. See, nowhere it is mentioned that both of them are insolvent. Clear? Here no one of them is insolvent. So I cannot apply the Gardner's-Murray rule over here. Remember. So let's figure out. So in this case what we do is, we do not take creditors over here. Whatever liabilities you have, please do not take it to the realization account. Without that, try to prepare the realization account. Let's see what to do. I will tell you. See, till the end, wait on for me. Till the end, wait on. You can connect all the dots. Wait. 4,800 plus 175 minus 230. That is 2,675 on the debit side. Sorry, on the credit side, 2,675. That means we have a loss over here. By partners capital account, this is a loss on realization. So between whom and whom? Amal and Bimal. Amal, Bimal. Ratio, equal partnership. So 1:1. So 2,675 divided by 2, if I could do 1,335, 1,337, 1,338. 1 rupees here and there. After this, prepare partners. After this, prepare something called as cash account. We will directly prepare cash account first. Why I will tell you. See how much more cash we have to pay off the creditors. So first of all, to balance brought down. How much is the balance of cash available with us? It is rupees 200. We have 200. How much did we realize from the assets? To realization account. To realization account, how much? 2300. Then how much did I pay towards realization? Expenses of realization account? 175 rupees. 175 rupees. Then over here they have mentioned that since we have a deficiency, Bimal's private asset can bring in only rupees 200. So if he brings in cash, it will be debited, right? To who's Bimal's capital account. How much? Rupees 200. Now try to balance of the account. 200 plus 2300 plus 200 minus 175 equals to 2525. What is this called as? This will be transferred to creditors. This amount will be transferred to creditors. How much ever balance you have remaining in the cash account, completely give it to creditors. Why? Because we had seen the priority list. Remember, first we will pay off outside liability. Then we will pay what? Then we will pay partners liability, like partners loan. After that we will pay capital, and after that if anything else remains, that will be surplus given to the partners in the profit sharing ratio. But in this case, there is even balance is not available to pay off the creditors. Now what to do in that case? The entry should be in this way, right? Okay. Now let's prepare creditors account. Creditors account. Debits, credit. So balance will be on the debits. Sorry, on the credit side because it is a credit, liability account. Brought down. How much of the balance of creditors? 4,800, I guess. 4,800. So 4,800. Out of this 4,800, how much is paid through cash? 2525. So on the debit side, to cash account, because it's paid, value of creditors reduces. So debit the entry. 2525. 2525. Now check how much is the balance remaining to be paid to the creditors. So how much is the balance? 4,800 minus 2525, that is 2275. 2275. This balance, whatever remains, cannot be paid to them. This will be transferred to what? To deficiency account. Right? Okay. Now let's prepare partners' capital accounts. Wait, everything will match up. Don't worry, don't take tension. This is my partners capital account. Now let's go take the opening balances. So Amal has a credit balance of 750 rupees. So buy balance 750 rupees, right? Buy balance brought down. Then Bimal has a debit balance. Buy balance brought down. Bimal has a debit balance of how much? Rupees 550. 550. Okay. Then realization loss. Remember, this has to be taken care of. 1337 on the debit side. By realization account. 1337, 1338 to just match it off. Done. After this, anything else? So Bimal has brought in how much? Bimal's private asset has brought in 200 rupees. Remember through cash. So by cash account. And he brings in, the capital value increases. Rupees 200. Now try to balance both the accounts. Amal 750 minus 1337 equals to 587 on the credit side. 587. That means this is what? This is the deficiency in the capital. But see here, first of all, whatever realization loss you have, it cannot be made good over here. Why? Because there is no partner who is insolvent. See, when does Garner and Murray rule applies? Whenever there is an insolvent partner and remaining partners are solvent. In my case, the question do not talk anything about an insolvent partner. Right? The question do not talk anything about an insolvent partner. But the question says that there is no enough capital remaining to pay off the deficiency. That's it. Okay. So now by cash account. By this will transfer to deficiency account. Now Bimal 550 plus 1338 minus 200, that is 1688. 1688. Now let's prepare deficiency account. We do not have anything, but we have transfer entries. Remember, one from here and then two from here. So pass all of them. So by creditors account, how much? 2275. 2275. Then over here from the partners capital account, sorry, this is by partners capital account, how much? Make a total 1688 plus 587. Please write it in different capital heads in the examination. 2275. So what has happened over here? My deficiency account is tallied. That means my partner's deficiency is matched with creditor's deficiency. That means I was not able to pay creditors this much. This loss has been borne by whom? Of non-payment by the partners. Done. So this is how we prepare. See, in this case, it is implied that all the liabilities cannot be paid off. How can I know that? How will I know that? Because here only, see, through realization, how much have I received? Only 2300. And even partners capital is not enough to pay off the 4800 worth of creditors liability, right? And I don't have enough cash balance also in my account. Because of that, I will come to know that I have a deficiency account to be maintained. I have a deficiency account. So whenever you feel that there is a deficiency account to be maintained, please, first step is, do not take creditors on this side. Please do not take creditors on this side, right? Whatever liability is given to you in the question, please do not take it. Try to pay off the liability as much as possible to the cash account. Then open the liabilities account and see how much deficiency is remaining. Transfer that deficiency to a new account called as deficiency account. Then go to partners capital account. See how much partners capital account is available as the opening balances. Then look at how much can be realized, and at the end see how much can partner bring in. After that, find out the deficiency. If extra remains, you pay it off, no issues. But if the deficiency remains, transfer it to again the deficiency account. And now this time cash account will not tally, but my deficiency account will tally. Clear? This is how we need to prepare. Done? Okay. So look at this question over here from illustration 2. Okay. I won't be solving this whole question, but I want to tell you some small facts over here. See, in this question what has happened is, just a minute. See, partners have fixed capitals and also they have current account balances over here. And now this firm has dissolved. And one partner, I think partner Q, has become insolvent. Okay, R was forced into bankruptcy. So he has become insolvent over here. And P and Q are solvent. So what to do over here? See, everything remains the same. We need to apply Gardner versus Murray rule and transfer whatever the balances are there to the partner's capital account. See, this is what cash account, but before that realization account. In realization account, they have what? They have losses over here, right? R has become what? Insolvent. Okay. Everything remains the same. Just go through the question. You'll come to know. You will only come to know how to prepare realization account. Now this insolvency, again, I have told you, right? Whatever insolvency is there and you are applying Gardner versus Murray rule, what should you do? You should bring in the realization loss in cash. So see, realization loss I have taken over here from the realization account directly to all the three partners. After that, see, in bank account, Mr. P and Mr. Q have done what? They have brought in the money through what? Through bank. This is a realization loss made good. But whereas Mr. R has brought nothing. Why? Because he is insolvent. He cannot bring in any more money. He has raised his hands. I cannot bring in any more money. So because of that, Mr. R is not bringing in any money. Done. First part. Second part, what I want to tell you people is this part. See, current balances in the what? In the current accounts. The current account balances, whatever you have. See, Mr. P, Mr. Q have credit balances, whereas Mr. R has debit balance over here, right? So now what to do? Now adjust the share of profit and losses. See, in my balance sheet, check for the general reserves, check for P&L account balances. So go to the balance sheet top in the question. See, in my question, in miscellaneous losses, I have R's current account, no issues. But I also have what? Profit and loss. This is the loss cumulative or accumulated losses of all the years. I need to distribute this. But in this case, since we have current account given to us, we will distribute this loss in the current account. Remember, fluctuating capital, fixed capital in unit number 1. Go through that. Look what is transferred to the partner's current account first. Those things transfer it to the current account and then transfer the current account balance to capital account. So first of all, open current account, adjust general reserve or profit or loss accordingly. Losses will come on the debit side, whereas profits will come on the credit side. That we know by now of the current account. After that, transfer balance of current account to what? To capital accounts. See over here. How much is the balance remaining in the current account? Have a look. So adjusted current account balances. So P has a debit balance of 5,500, C has a credit balance of 5,000 rupees, and D has a debit balance of 2,400. So this entry will be passed on debit side, this entry will be passed on credit side, this entry will be passed on debit side of the capital accounts of the partner. Have a look over here. See, current account on debit side 5,500, 2,400, and over here current account transfer as per the working note 5,000 to the Q account. The same thing has been done over here. Clear? So once that transfer is done, everything remains the same. So whatever deficiency Mr. R has, has been shared by whom? Mr. P and Q. In what ratio? In capital ratio. Look over here. 300. Why 300? Because see, as per the question, where did it go? See, as per the question, the profit sharing ratio is what? 3:2:1. That means P is 3, whereas Q is 2. But the deficiency was shared equally. Remember why? Because Mr. P and Q have equal capital. 2:2, 1:1 ratio. Simply, right? Because of that, the deficiency of Mr. R has been shared what? Equally between Mr. P and Q. Done. So after that, what to do? After that, prepare the cash account. The accounts are given up and down. So first prepare realization, then prepare partner's capital account, and then go for the cash account. So at the end of the day, cash account has completely tallied. Nothing remains as a balance. Done. So this is what you need to do. So now let's discuss two different methods where the losses will be shared in two different ways. Let's see. The first method is maximum loss method. So here what happens is the person having a maximum loss will be given the most share. Let's see. See, these two topics might come in an examination. It is a completely step-based methods. Clear? It is a step-based method. Here you need not prepare any ledger accounts. It's a format. So let's have a look at it first of all. So in the following is the balance sheet of ABC on 31st of December 2022 when they decide to dissolve their partnership firm. So they have given you creditors, ACE loan and capital balances, then here sundry assets and cash. So the assets realized in the following sums in installments. So these are the 1, 2, 3, 4, 5. 5 installments we have received the money. So as soon as we receive money, we will distribute it. I receive money, distribute. I receive money, distribute. Now, what is the preference of distribution? First preference will be to whom? First preference will be given to whom? To outside liabilities. Second preference will be to whom? Partner's liability, not capital. Partner's liability like loan, partner's loan. Third preference will be given to whom? To partner's capital. Fourth priority will be the, again, partners only. Partners, but the surplus, if any remains in the surplus, that will be given to the partners. Clear? Okay. Then, expenses of realization were expected to be 500 rupees, but ultimately amounted to rupees 400. Show how each stage of cash received should be distributed between the partners. They share profits in the ratio of 2:1. So whenever they say, show this part, how it is distributed between the partners, in that case you need to apply this method. Remember. So here, see, there is a saving of 100 rupees. We had thought that we might need 500 rupees. But we had paid only 400 rupees. So that 400 rupees minus 500 rupees, that is 100 rupees saving. 100 rupees savings has been taken over here. That is what is given in the note number 1 over there. Small 1 is given, right? That is what is given in the textbook. Clear? Okay. So let's start. So first of all, let's prepare the format. So first priority will be given to what? As per the liabilities. What is the liability we have? What are liabilities we have? We have creditors, we have ACE loan. So first priority will be given to creditors. Second priority will be given to ACE loan. Done? So now particulars. realization, creditors as first priority. Then we have A's loan. Who is A? Who is A? A is a partnership in the firm, a partner in the firm. Remember? So now, first realization. In first realization, how much did I receive? 1000 rupees. Before this, do one thing. Write down the balances better. Write down the balances first. Balance. How much is payable to creditors? Rupees 2000. Rupees 2000 is payable to creditors. Then Ace loan 5000 rupees. 5000 rupees. Okay. Now, first realization. First realization. How much did I receive in the first realization? Rupees 1000. So, 1000. To whom will I pay this 1000 first? First, it should be paid to the creditors. So, pay to the creditors. Right? New balance. How much is the balance remaining? Here 1000. Here 5000. There is no change in the balance for the Ace loan. Okay. Then next, how much did we realize? We have realized 3000 rupees. So, second realization. It is 3000 rupees. So out of this 3000, I will first pay off creditors rupees 1000. So now the new balance is what? 0. Whereas remaining amount of rupees 2000, out of rupees 3000, 1000 rupees has been paid for creditors. So remaining how much? 2000 rupees will be paid to whom? Will be paid to Ace loan, towards Ace loan. So how much remains in Ace loan now? 3000 rupees as the balance. Okay. After this, next, third realization. How much did I receive? In third realization, I have received 3900 rupees. 3900 rupees I have realized. So, out of this, how much will I adjust? Only rupees 3000 can be adjusted. Why? Because the loan is only 3000 rupees. How can I adjust more? Right? So, how much remains? 0. But in balance, how much remains now? Out of this 3900, 3000 has been utilized towards Ace loan. How much remains? 900 rupees remains. So, 900 rupees is remaining in the balance. Now, where will I use this balance? Towards payment of partner's capital. Now comes the main part. How to adjust partner's capital? This is the question. Right? Okay, let's see. Now again prepare a new format. Payments to partner. Now comes the main crux part of the maximum loss method. So we have particulars. Realization. Partner's name A, B and C. So capitals of whom? A, B and C. So now first of all let's start with balance. How much remained over here? 900 rupees. Remember, 900 rupees was remaining from the realizations. Then partner's capital account 15, 18 and 9000. 15,000, 8,000 and 9,000. Make a total of all the capital. 15,000 plus 8,000 plus 9,000 equals to 18,000. 15,000 plus 18,000 plus 9,000 equals to 42,000 is remaining. Right? Capital I need to pay how much? 42,000 is to be paid. But now in this realization, how much is remaining? 900 rupees is remaining. So we will find out what? We will find out something called as maximum loss. Maximum loss we will find out. How will I find that out? 42,000 rupees is remaining to be paid. Out of that I can pay how much? Only 900 rupees can be paid. Right? So how much remains as a loss? So we will assume that this remaining amount is a loss of rupees how much? 41,100. Clear? Now how will I distribute this between the partners? In their profit sharing ratio. Now what is the profit sharing ratio over here in this case? Profit sharing ratio. It is, remember, 2:2:1 is the profit sharing ratio. So divide it now between the partners. Divide 41,100 in the ratio of 2:2:1. Divide by 5 equals to 8,220 into 2 equals to 16,440. Now since this is the loss, I will get what? How much amount that I can distribute between the partners. So minus both of them. So let's see how much is the balance. So 15,000 minus 16,440 equals to minus 1,440. 18,000 minus 16,440 equals to 1,560 in positive. Then 9,000 minus 8,220 equals to 780. That means Mr. A has deficiency over here. Mr. A has deficiency. Mr. A cannot bear this much loss. Why? Because his capital is only rupees 15,000 and he cannot bear a loss of 16,440. Now what do? Now we will distribute this in capital ratio applying Garner versus Murray. I know no one is insolvent, but still we will apply the Garner versus Murray rule. So deficiency divided in capital ratio. So ratio will be what? So this will be borne by whom? This loss will be borne by whom? Mr. B, Mr. C. Clear? Mr. B and Mr. C will bear this loss. In what ratio? In 18:9, or I can say 2:1 ratio. 2:1 ratio. Clear? Okay, let's see. So 14,440. 14,440 divided by 3. Why? 2 plus 1, 3 divided by. So I will get 480 over here in negative. Then into 2 equals to 960 over here in negative. Now at the end, what do I get? I get amount to be distributed between the partners. How is this happening? I will tell you. See over here positive 440. Why? Because I am cancelling this off, right? I am transferring this loss to what? To this loss to these two people over here through this way. Just try adding 960 plus 480. How much will that be? 1440, right? So this minus this, how much will it be? 1560 minus 960. After bearing the deficiency of the other partner, how much will Mr. B have as a remaining balance? 600. Then 780 minus 480 equals to 300. Now if I just add these both, how much will it be? 900. Somewhere we have seen 900. Remember, this 900 is what? Actually equivalent to this 900. That means this 900 rupees I have shared how? 600 over here, 300 over here. This is the step you need to follow. First of all, find out the maximum loss. After dividing this amount minus the total amount required to be paid off, how much will be the maximum loss? How much will these all partners bear? It is 41,100 rupees. Now divide this 41,100 between all the three partners in what ratio? In profit sharing ratio. That is 16,440 and 8,220. Find out how much is the balance remaining. If everything is in positive, that means no issues. That means there is no issue. But if any one partner has a deficiency, it will be shared between other two partners. But sir, what if two partners have deficiency? That deficiency will be shared by the other partner who is not having any deficiency. Clear? Let us say this was negative 1560. This both amounts will be shared by this person. Clear? Okay. Now next. After that, divide this in what ratio? In capital ratio. Between the other partners who don't have any deficiency. After that, minus, and you will find out the division for this amount in these two ways. Clear? Now find out the balance remaining. Balance. How much remains over here? 15,000, because I did not pay any amount. See over here. 15,000 or this level of capital minus the distributions done. So find out how much will that be. 15,000 here. 18,000 minus 600 equals to 17,400. Then 9,000 minus 3,000 will be 300. 300 will be 8,700. Just make a total of this. 15,000 plus 17,400 plus 8,700. That will be 41,100. Got it? The maximum loss, whatever we have found over here, has been given as the answer. If these two tallies, that means you are proper. Okay. Now again, next realization is done for how much amount? Sorry. Next realization. So after 3900, on fourth realization we have got 6000 rupees. So go back. We have received how much? 6000 rupees now we have received. Now again find out what? First of all find out maximum loss. How much is the maximum loss? Maximum loss. How will you find this out? How much ever is balance is remaining to be paid minus realization. So 41,100 minus 6000 rupees realized. How much is the maximum loss? 35,100. Now divide this. Now divide this loss in what ratio? In profit sharing ratio of 2:2:1. 2:2:1. So divide by 5 equals to into 2. But before that 7020 equals to 14040. Then 14040. Deduct this maximum loss and see how much to be distributed between all the partners. How much to be distributed? 15,000 minus 14040 equals to 960. 960. Then 17,400 minus 14040 equals to 3360. 87200 minus 7020. So does anyone have a negative balance over here? No. What does that mean? That means nobody has a deficiency. Nobody has a deficiency. And if I add all these three amounts, check how much will that be? 960 plus 3360 plus 1680. It will be rupees 6000. It will be rupees 6000. That means I have divided rupees 6000 among all the three partners in this ratio. Done? Okay. Now what we'll do is we will balance. We will find out the new balance. Distribution made. Again, let us say, if this was in negative, what will I do? Divide between these two people. That's it. In what ratio? Capital ratio, sir. Done. Now balance. Check how much balance remains. What will I do? Now how much is the balance? So do this minus this, this minus this, and this minus this, and you'll get your balances. 15,000 minus 960 equals to 14,040. Then 17,400 minus 3360 equals to 14,040. Then 870 minus 1680 equals to 7020. That means see over here, the ratio has now been equal 2:2:1. Got it? So I am basically dividing it in such a way that at the end, and once I come at the end of the payments, all the capitals becomes equal to their profit sharing ratio. So 2:2:1. So that means I am paying more to the person who has more capital. I am paying more to the person who has more capital. Simple as that. Clear? Okay. So how much is total over here? Total will again be equals to your maximum loss. It is 35,100. Now last distribution. So how much is the realization next? At the end. So fifth realization is for 20,100 rupees, right? So go back, 20,100 rupees, right? So 20,100 rupees. Okay. Now again, find out what? Maximum loss. Maximum loss. How much? 35,100 was the required capital amount, minus how much is realized? 2,100 rupees. So how much will the loss be? 35,100 minus 2,100 equals to 15,000 rupees is the loss to be borne. Now how will this loss be borne? In the profit sharing ratio. So 15,000 divided by 5 equals to 3,000 rupees over here into 2 equals to 6,000. So 2:2:1 ratio I have divided the 15,000 rupees. Now last, find out what is this minus this. So how much remains as the balance? 14,040 minus 6,000 equals to 8,040. Again 8,040. Then 7,020 minus 3,000 equals to 4,020. How much will the total be? Rupees. Sorry. Not the balance. This is the distribution. Wait a minute. Sorry. This is the distribution. made. What did I do? This minus this, this minus this, and this minus this. This is a distribution. What the total will be? Rupees 20,100. If you want to check, you can check. 8040 into 2 equals to plus 4020. Is proper. Last we have the balance remaining. Balance, or I can say loss. Why loss? Because there is no more distribution pending. Everything is realized. So whatever remains now is the loss that they have to bear. The loss they have to bear. Okay. So how much will that be? So minus this minus this. Capital of rupees 1440 was remaining. Out of that I have paid 8040. So how much remains? 14040 minus 8040, sorry. 6000 rupees remains over here. Again 600 rupees remains over here. At the end 7020 minus 4020. It is 3000 rupees. So these amounts are the loss borne by the partners. So now the next question, based on highest relative capital method. So in the previous method we had found out how much is the loss that I can bear based on the realizations. Now I will find out whose capital has the most latency, or whose capital is more relative to the other capitals. So first of all, see, before me explaining it to you, better that we look at the question and understand the format properly. Okay, so let's start. So illustration number 8, a partnership firm was dissolved on 30th of June. Its balance sheet on the date of dissolution was as follows. So liabilities are given, asset is given. So we have cash, we have sundry assets. Then loan of B is there, sundry creditors are there. So first priority will be given to whom? To the sundry creditors. Then second priority, loan account of B, that is my partner. Third priority, to the capitals of the partner. Now, assets were realized in installments and the payments were made on the proportionate capital basis. See, this is your hint to use highest relative capital method. Clear? Okay. Creditors were paid 29,000 in full settlement of their account. So, how much was due to the creditors? 30,000 was due. How much did we pay? 29,000. So, 1,000 rupees is discount to the realization account. Expenses of realization were estimated to be 5,400, but actual amount was spent rupees 4,000 rupees. Fine. This amount was paid on 15th of September. Drop the statement showing the distribution of cash which was realized as follows. See, the expense for realization has been paid when? Here, on 15th of September, right? See, the question says on 15th of September. That means till 15th of September, I was not knowing how much is required for the realization. I had estimated the expense would be 5,400. So what I will do is, I will keep aside 5,400. Out of all the realizations, I will keep aside 5,400. And on 15th September, after I pay 4,000 rupees, 1,400 rupees will be extra. That I will add to this realization. Same thing has been done over here. In the previous question. See, the expenses for realization were estimated to be 500 rupees. But 400 rupees was the actual amount paid. Right? So 100 rupees was the benefit I have earned over here. So that has been added in the last part. Go to the book. This point number 1 you see, right? This point number 1, whatever you see, is the note given there. That the 100 rupees has been included in this. So do not include it once again. But in this question, they have not mentioned anywhere that this has been included in the realizations. So what I will do, after estimate, I pay only 4,000. So 1,400 rupees remains. That I will add to this realization because the expense was paid on this date, and after that I came to know that 1,400 rupees will be extra remaining. Clear? Fine. So now the partners share the losses in the ratio of 2:1. Again, remember this, really important. Prepare a statement showing the distribution of cash amongst the partner by highest relative capital method. Okay. So one thing remember over here, if the balance sheet has cash in it, first use the cash. Then go for the installments. See, in the previous question, one thing I forgot to mention to you people is, we have cash over here also. But I have not used this cash. Why? Because I'm supposed to pay this realization over here. I am supposed to pay this realization expense. So, what did I do? I did not use this. I used this towards the realization expense. Right? And then I came to know that only 400 rupees is required. So, what did I do with the rupees 100? I added it over here. Clear? Got it. Okay. Now let's start over here. Okay. So first of all, format. So first let's pay off all the creditors and B's loan. So now we have particulars, realization, then first priority will be the creditors, and then the second priority will be the BS loan. So first of all, you use the cash balance. How much do I can use from the cash balance? The balance is 10,800 minus some amount is required towards realization expenses, so minus 5,400. How much will that be? 10,800 minus 5,400. We have 5,400 only. Okay. What is the creditors balance? So I will just mention balance over here. Better. How much is the creditors balance? 30,000 is the creditors balance. And then BS loan is 10,000 rupees. BS loan is 10,000 rupees. Okay. Now, from realizations, adjusted towards creditors, how much? 5,400. How much is the balance remaining? 0. Then over here 30,000 minus 5,400 equals to 24,600. Then the loan full 10,000 rupees. Nothing has been adjusted towards loan. Next, on what date? On 5th of July we have realized 25,200, right? So 5th July 25,200, 25,200. Now adjusted towards creditors and loan. How much over here is required? 24,600. Then over here how much can I adjust? Only rupees 25,200 minus 24,600 utilization, rupees 600. Now again, balance how much? Over here to complete utilization 25,200, right? So nil. So here nil. This one. Oh, wait a minute. Before adjusting this, one thing we forgot. Creditors have given us a discount. Remember? Forgot. Creditors have given us a discount. See over here. Only 29,000 is required to be paid to them. So how much will I pay? Over here now? First of all, find out how much the discount given. So 30,000 was payable. 29,000 is the amount paid. 1,000 rupees is discount. So out of 24,600, I will not pay 1,000 rupees. So how much will I pay? Only rupees 23,600. And remaining amount 25,200 minus 23,600. 1,600 rupees I will adjust towards the loan. So now how much remains over here? Rupees 1,000. And over here rupees 10,000 minus 1,600 is equals to 8,400 remains. Now let's transfer to realization account. Realization account. How much? Rupees 1,000. Why? Because this is the benefit I have received. From the realization. Right? Okay. Next. What is the realization? Next realization. On 30th August, 60,000 rupees. So 30th August realization. 60,000. How much do I need? So here nil. 8,400 towards what? The loan. Adjusted towards loan. So now how much is the balance remaining over here? So out of 60, how much did I use? 8,400. So how much remains? 60,000 minus 8,400. So I have still a balance of 51,600, but every payment is done. Now where will I use this balance towards? Towards the payment of capital. Now comes highest relative capital method. How to work out this? I will tell you. First of all, prepare a format. So now let's start with present capital. See, this is a step-based method. So please do not use much of logic over here. So please follow the steps. That's it. So present capital. First of all, write down how much is the present capital. So the capital is 76, 48, 36. 76,000, then 48 and 36. 48 and 36,000. Now what should I do? I should mention the profit sharing ratio. What is the profit sharing ratio as per the question? It is 2:2:1. So 2:1. Next, I will find capital per unit profit share. How will I do this? I will divide capital with the profit sharing ratio. So 76,000 divided by 2 equals to 38,000. 38,000. Then over here 48,000 divided by 2, that is 24,000. Then over here 36,000. Done. Next what I will do is I will find whose capital is the least. Whose capital is the least over here in this? It is Mr. B. Mr. B. So keeping Mr. B's capital as base, I will find proportionate capital of A and B. See how will I do that? Proportionate capital keeping B's capital as base. So now I will find out the proportionate capital keeping B's capital as base. So what to do? Simply multiply this with 2. Simply multiply this with 2. How much will that be? Rupees 48,000. Then again 24,000 into 2. How much will that be? 48,000. Then 24,000 into 1. 24,000. Done. Now let's find out excess capital. Excess capital. How much is the excess capital? See, this should have been the capital, but how much is it? This much. So how will I find how much is more? This minus this, this minus this, this minus this. Let's see. So 76,000 minus 48,000 equals to 28,000. Then 48,000 minus 48,000. How much is it? 0. 0. Then next 36,000 minus 24,000. How much is it? 36 minus 24. It is 12,000. 12,000. Okay. Now again repeat the same steps. Repeat the same steps. Write down profit sharing ratio, that is 2:1. In this case for Mr. B it is not required. Why? It is already 0. It is already 0. So no, not required for Mr. B. Now find out capital per unit of profit. Per unit of profit share. That means divide 28,000 with 2, 12,000 with 1, and find out how much is the answer. 28,000 divided by 2 equals to 14,000. Then 12,000 by 1 is already 12,000. Okay. Now again find out proportionate capital. Proportionate capital. Proportionate capital keeping whose capital as base? Whoever has the least capital. Whoever has the least capital. Who has the least capital over here? Mr. C. Mr. C, that is 12,000. So keeping C's capital as base. Capital as base. So his capital will be 12,000 rupees only. Why 12,000 rupees? Because 12,000 into 1. To find out Mr. A's capital, what to do? 12,000 into 2. It is 24,000. Done? Okay. Now again find out what? Excess capital. How do I find it out? So how much is the capital remaining? To find out the excess capital, what will I do is excess capital. What will I do is 24,000, and this was the excess capital, right, previously. So how much more is there? How much more is there? To find out that, simply this excess capital minus this excess capital. So that will be how much? Rupees 4,000 over here, and over here nil. Why? Because 12,000 minus this is 0. Got it? And over here, however, it is 0, because 0 minus 0 will be 0 only, right? Okay. So that means how should the payment be done? How should the payment be done? First payment will be 4,000 rupees to Mr. A. Then second payment will be 28,000 minus 4,000. That is how much? How much? See, first payment will be 4,000 rupees. Nil to both the people. See, what is my motive here is to pay off them, to pay the first person who has most capital with respect to his profit share. I will go on making it equal to them, right? So first I will pay whom? Mr. A. See, let us try it out. Write down the capitals. How much is actual capital? 76, 48, 36, right? So 76,000, 48,000, and then the last capital is 36,000 to Mr. C. This was the actual capital. Now how will I make the payment? First of all, I will pay Mr. A rupees 4,000. So let's pay Mr. A rupees 4,000. How much remains over here? 72,000, and over here 48,000, and over here 36,000. Okay. Next access capital is how much? 28,000 should have been paid to Mr. A. But already how much have I paid? 4,000 rupees. So next payment will be for how much? Rupees 24,000. See, I should have paid these amounts, right? But to Mr. A, I have already paid how much? 4,000 rupees. So out of 28,000, 4,000 rupees is paid. How much next should I pay? 24,000. So to Mr. C, how much should I pay? 12,000. But Mr. B, nothing. Mr. B, nothing. Right? So 12,000 rupees over here. So how much is the remaining capital? 72,000 minus 24,000 is equals to 48,000. Then over here also 48,000, and then Mr. C, 36 minus 12,000 equals to 24,000. So that means my capitals are in what ratio now? 2:1 ratio. Now go on paying all of them equally after this. After this point onwards, go on paying them depending on their capital ratio. That's it. Sorry, depending on their profit sharing ratio. That's it. Simple as that. Clear? Okay. Now let's start. So now, before paying them, let's prepare the format. So particulars, realization, A, B and C. How much is the balance remaining? 51,600. 51,600, right? So after this, how will I pay this? So first priority will be given to whom? To Mr. A, that is 4,000. Then Mr. B, 24,000. And here Mr. C, 12,000. So I will write it in this way. First 4,000 to A, B, C. 4,000 over here. Then second 24,000 to Mr. A, Mr. B nothing, Mr. B nothing, Mr. B C nothing in the first instance. In second instance, Mr. A I will pay 24, Mr. C I will pay 12,000. Same what I have done above that. Now it's paid. So how much is paid? Just have a look at over here. 4,000 plus 24,000 plus 12,000. So how much did I pay? Only rupees 40,000 I have paid. By adding all this, that means I have paid only 40,000 rupees. How much remains? Out of 51,600, 40,000 is useless. How much remains? So minus 51,600 if I do, rupees 11,600 remains. Now 11,600 remains, right? 11,600 remains. Now I will divide this in the ratio of 2:1. So let's try. So third I will pay in 2:1 because all the priority payments are done. So 11,600 divided by 5. By 5, 2 plus 2 plus 1 is 5. So divide by 5. So I will pay 23,202 to Mr. C into 2 equals to 46,402 to B, 46,402 Mr. A. Check how much the total payment is done. 4,000 plus 24,000 plus 46,400 equals to 32,640. Then over here 46,400 plus 2,320 equals to 14,320. No, let's make the payment. So 51,600 is made payment how? First of all 32,640. 32640. See, whatever I am writing, please write it down because when I am scrolling here and there, you might miss some details. So please write it down. Clear? 4640, 4640. Then 14,320, 14,320, 14,320. So if you want to confirm, you can just add all this. Your answer will be 15,600. Just try 32,640 plus 4,640 plus 14,320. The answer is 15,600 rupees. Clear? Clear. Okay. So now, how much balance remains in the capital? Balance payable. Balance payable is how much? So balance payable is basically how much of the opening balances. Oh, I forgot to mention the opening balances, right? So the balances were 76, 48 and 36, right? 76, 48 and 36. I will just mention it over here only for now. 76, 48 and 36k. Okay, please mention it above these amounts. So 76,000 minus 32640. It is how much? 43360. Then 48,000 minus 4640 equals to 43360. Then 36,000 minus 14,320 equals to 21,680. If you want check, this is in 2:2:1 ratio. If you want to check, you can check, right? Then next realization, last realization. How much? On 15th of September, I have realized 80,000. But remember, I have paid this 400 rupees, and how much was extra amount remaining? 1,400 rupees. Because see, I have not used this amount over here. But out of this whole amount, how much is paid? Only rupees 4,000 is paid. Only rupees 4,000 is paid. Because of that, 1,400 rupees remains extra. So how much is the total realization? 80,000 plus 1,400. That is 81,400 rupees. So out of September 15, 15 September, how much is the realization? 81,400 rupees. So how will I divide this? Distributed in what ratio? In profit sharing ratio of 2:2:1. So 81,400 divided by 5 equals to, why 5 sir? Again 2:2:1. So 16, sorry, not over here. 16,280 into 2 equals to 32,560. 32,560. Now remaining balance, or I can call it as, was loss. How much? 43,360 minus 32,560 equals to only 10,800 amount remains over here. Again over here also same amount will remain. Then 21,680 minus 16,280 equals to 5,400. So that means whatever losses we have got is in what? Is in the profit sharing ratio of 2:2:1. But from where did we start? From this ratio. Got it? So please follow this step properly and try it out. So first of all, see, I will just glance it for you people. First, what do? We just write down whatever the opening balance of capital is given to us. Then write down the profit sharing ratio. Then find out capital per unit per profit. Per unit profit share. So divide 76,000 by 2, or whatever the capital ratio, whatever the profit sharing ratio is given to you, and you will get these balances. Then find out the proportionate capital keeping the least one's capital as base. Which is the least one over here in this? It is 24,000. So keep it as a base and find out the proportionate capital. So 24,000 into 2, that is 48,000. 24,000 into 2 again is equals to 48,000. Then again 24,000 into 1, that is 24,000. Now find out how much is capital is excess. So how will you do this? So whatever opening balance of capital you have minus the proportionate capital. How much capital it should be? So you will get your excess capital. Then again use the same formula. Again 2:1. Okay. Then again same capital per unit. Then find out which is the least one out of these both. This is the minimum one. So again multiply it with the profit sharing ratio each for each one of them. So 12,000, 24,000. Now after this step, since 28,000 was the excess, out of that 24,000 we have got over here. So how much more should I pay? 4,000 rupees. So first pay 4,000 to Mr. A. Then pay 28,000 minus 4,000 rupees to Mr. A, and then only rupees 12,000 to Mr. B. See over here excess capital 28,000 is there, right? But out of this 28,000, how much have I already paid? 4,000 rupees. So how much remains? 24,000. So what I do over here, I pay in the second installment 24,000 and 12,000. So if you want, you can see over here. So in the second installment, I pay 24,000 and 12,000 to this guy. If I combine these both, it is 28,000. So after that, since the capitals are equal after this stage, see, we have seen over here 48, 48 and 24. Capitals are equal, right? So after that stage, pay all of them in what ratio? In profit sharing ratio. This is what you need to do. Right? Got it? Done. So we are done with the dissolution. So look at the questions. Like most of the questions are really easy ones. So capital adjustments I have taught you. Whatever the current account adjustment also I have taught you. So please look at the question. It is a really easy question. Whatever current account adjustments have to be made, make it in the current account adjustments, and then after that go for the capital account by transferring all the current account balances to the capital account. Clear? Okay. Thank you.